The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the last day of April the 30th. We're looking at the Dow down 670 at 39,860. So far, if you look at the patterns, this is just a distribution pattern, a very short term. But the trend so far has been to slightly higher highs and higher lows. Most importantly, if you're looking at the, let me just get this right here. I want to just get that there. Excuse me. Okay, get that again. Yeah. Oh, keeps going down. That's fine. I'm sorry. I just needed to do this, and I'll be back in a second. There we go. So within that context, what I am looking at is the Dow has been kind of the weakest in a way. Look at the S&P, even with today. So the Dow is down almost 700 points. The S&P is down 115. But look, it's been making slightly higher highs and higher lows. And the 9-period moving average is over the 14. The stochastic's flat at 95%. The MACD is good. So technically, there are a lot of aspects to this that suggest that the trend so far you could consider is up with slightly higher highs and higher lows. And we'll see where we close and where we close on Friday as we get into the second day of May. So this is going to be very important. Look at the QQQ. 1, 2, 3. There we go. QQQ is down 11.78 at 463.91. It's the same thing. The technicals here are all, look, the stochastics at 95%. That is usually a very good sign. It hasn't plummeted with a slight pullback. And I want you to show you something here. Let me go to the IWM. IWM is down 5 at 190.90. Same thing. Yeah, it's peak C if there's no new high today. But most importantly, look at that. The 9 is over the 14. The MACD is expanding. The relative strength is pulling back a tad, but it's still pretty good. The on-balance volume is rallying. It's not great. And the stochastics at 92%. I mean, I like that. So within that context, what I am going to say is that under the circumstances, what I would like to see, and what I would like to see doesn't mean to say it's going to happen, but what I would like to see is that we come off the lows, going into the close today. We're now down 642. Just imagining that this is a purely tactical thing where by February, March, April, and now all of a sudden you've got a very weak month starting, and then it closes way off the lows from that April, the 7th low. And now we have to look at that monthly candle. And that monthly candle suggests very strongly that within the context of the daily charts, let's just skip the weekly charts for the moment, there is some strength. All right, so this is just intense this is almost portfolio management selling as I see it right now. All right, with that said, let's go to something that I wanted to do. I was going to do it yesterday. I wanted to wait for the end of the month. We haven't got the end of the month yet. We really have to wait until 4 o'clock. But let me just show you something here. This is the S&P. And what I've done over the years, decades actually, is I've put in each administration. So you can see here the Obama administration picks it up with a major crash low at 666.79. And that was March the 20th. That was the 9th. Remember, the 6th is when we went along the Dow. Monday, that was Friday. The Monday was the low of the S&P. And whoosh, it goes up. And it's really a spectacular move in the sense that there was, I think, minus 15%-ish, maybe minus 15% declines, mostly going to higher highs and higher lows. All right, with that said, I just want you to do something here. I don't want to just do that arbitrarily. I need to look at it. Yeah, I like this. So this is the E-mini. It's just starting to move to the upside. A huge selling pressure. Let me just see if that's going to work out. Yeah, I think that there's a good chance that we're trying to make some kind of a tradable low just on the very short term here. And if that's the case, we'd have to see, way up. We're at 54.82 right now in the E-mini. You'd have to see 55.19 to get to the first 200 period exponential moving average, and that's going to be a big challenge. So with that said, what I want you to do here, just move that up. Okay. Looking at the S&P, look what happened during the Trump administration. Picks it up right over there to say 20. I should have written that in. I think I forgot to do that. But right there, let's just say picks it up on the January 2017. Let's go to the high, 2,300, right? So 2,300. And within that context, there was a 35% decline from February 2020. It was just like a 2-month whoosh pullback, and then it ran up to 48.16, and then there was a 27% decline, and then we went higher. I looked at the wrong one. Sorry, 35% decline to the March 2020 low. That's actually, we've still got our diamonds that we bought then. And it runs all the way to where Biden takes over in January, and Biden comes in, and in the period that goes to round about the end of January of 2022, we get a 27% decline. And look what's happened. We've only had a 17% decline. I say only because if you listen to any, I don't think I've spoken to anyone, family, friends, doesn't even matter what age. They could be in their 20s, they could be in the 80s. And to a person, they're saying to me, oh my God, this market, my portfolio. But when the media just keeps repeating over and over, if I had to go to Google, they wouldn't do it. I've tried it before. And say, what are the negative headlines to the economy in the last 3 months, as opposed to where they were back in the slide of 2022, you would find, I don't remember reading anything like this on that 27%. And here we are at 17%. So I could be completely wrong about this, but I'm just saying that the media has pushed the narrative of, oh my God, your portfolio. And I'm just saying, I'm just looking at the chart. I don't care who, what, where. I'm just looking at the chart, and 17% is definitely better than 27%. Okay? And I don't see that anywhere. So now I'm looking at this particular candle. Now the Dow is down 94. S&P is down 94. It's come back a little bit, and we'll see what happens. The day's young. I think that we might have just seen at least the morning low. We'll see. The day's young. I'll be back in a moment. And Basil Chapman, Tiger Conditions Hour. Dow is down 575. S&P is down 93. You're right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, we're back, and now let's get back to our story. So all I'm saying is, I don't care who the administration is, 27% is not 17%. It could still go down to 27%. There's absolutely no question that that's a possibility. I'm just saying that the amount of negativity is so intense that it's helping every time there's a sell-off to exacerbate that sell-off. So the upside has to work much harder right now. All right, done. Let's go on. We want to look at the TLT. The TLT right now is trading down 59 cents. At a leg C, it could be a peak C, but most importantly, we're starting to see that yields, they're not in the way at this particular point, and that to me is very important. I want to go back to Bitcoin. Bitcoin is down 21.20, made a peak C. So for 3 days, it hasn't been able to break to a higher high. Usually you get that leg D. Stochastics at 94%. That's good. The MACD is very strong. The relative strength is holding very nicely. It did pull back a tad, but it's still holding very nicely. All I can say is that I'm watching this very closely. Why? Because I'm looking at the dollar. And the dollar right now is up 17 ticks, but it's still down in the basement. It's just not looking that good. That's the dollar. Let's go to the EUR USD. That's the euro-dollar currency pair. Stalling at that peak D. Let's look at the USD JPY. That is the yen, and the yen is stalling at the bottom range. That's why I think that for the moment, just maybe as a reflex action, money did go into the Bitcoin, and now today it's just taking a breather, and we'll see if that's going to last. Question came in about MJ. This is the Alternate Harvest ETF, cannabis sector. Wow, it's gone from 400. This is the ETF, Alternate Harvest Cannabis ETF. Back in February of 2021, had a little bit of a pop to the upside off the IPO in the 140 area. It pops up to 434.96, and it's trading right now at $19.90 after being split 10 for 1, I believe it was, maybe 20 for 1. I don't know when it was down in the ones or twos. Yeah, 10 for 1. And it's at a peak C. You know, I think it was summed up pretty well. The question came in from Peaky in the Den, and the answer came in, I think, pretty well by, where was it? Hold on, one second. Okay. So, question. Look at the monthly doji. I have not heard a peep about the cannabis group. Any hope, or is it up in smoke? Thanks. That's for the cannabis sector. And almost immediately, Dude in the Den says, no legalization, no banks to lend money. Cannabis group is dead until legislation. And I've been talking about that for years now. And question, what is it? DUOL? Oh, let me see. I don't know DUOL. DUOL. Look at that chart. Oh, look at that chart. This is, if I can read it, Duolingo, let me see. Okay, so here's the chart. Look at this monthly chart. Let's just walk in the 9-period moving average. Duolingo Inc. Class A common. Okay, I now remember seeing it a long time ago. There's Duo, and then so I like this one in terms of A, B, C, D, E, F, G. That could be an alternate count. This could be a G/B. That's really strong. So the monthly chart is looking very good. There's the cup formation in the weekly chart. And it looks to me if at 383.02 down 2.11 right now, if it's able to get to, in the next 3 days, I must give it until next week. By Wednesday of next week, a week from today, if it's able to get to 386, what was that high? That high there was 396.85. Yeah. So if this is at 382 right now, if it's able to get to 386 in the next day or two, then it's probably going to tackle the high that was made yesterday, which was at 396.86. Key support is this gap. Look at it many times. It's 1, 2, 3, 4, 5. This is the fifth session since the gap up that it is rallying above the gap low. That is the gap up low, which is at 362.14. Oh, I really do like this chart. I don't know what they do. I don't know if you want to tell me about that, Elo. But let me just scroll down to see if anybody's mentioned what it does. So the symbol is, I'll say it again, DUOL, and it's acting beautifully. And in this beautiful action right now, all I can say is, let me just quickly do the notation from the bottom. Always choose the lowest low, most identifiable low, and that becomes an A right there, A. No, that's a double top, so that's a B. That's a C, 1. Potential C2. This is an A. That's a B. And that's a C. Yes, I like this very much. Now I also want to know what it does. So let me just check this out here. I'm going to go here and say, of course, do I remember the name? The name is right there. Duolingo. I think this is, well, obviously it sounds like a language company, right? Duolingo. Let's call it Inc. does. And what do? Lead a language learning platform that provides online language courses through its app and website. It also offers a digital English proficiency test. Oh, I like this. Yeah, this is kind of in the right area right now. I like it. I like it very much. And I'm going to make a note of it. I don't know if we can get it right here. DUOL. Very nice. Okay. With that said, the next question came in. Could I look at the gold and the GDX, etc.? So the gold is down 9 now. You see how it's like the go-to place. There's still this geopolitical, economic uncertainty. So money keeps going into it, but it's not breaking out. It's not breaking down. So I have to look at this and say, there is and we are long, so I've got to mention it. There is the chance that we're looking at a distribution phase. If at any point, and I won't make it any point, I'm going to give you a specific time. If within the next 3 to 4 trading sessions, it can't close. It can pop, but it must close above 3,400. If I can't do that, then I have to be very careful and say, okay, make the 32.35 level. It's at 33.20, so it's a little bit way down. But make that key support. If it breaks under that, I'd be very, very careful. All right, so with that said, that's the GC. Now let's go to the gold miners, the GDX. And GDX is trading right now up 12 cents at 48.59. And it's got the pattern that I call the dreaded H, but as long as it's holding, as long as that 9-period exponential moving average is holding nicely above the 14 green, the MACD weak, the rental strength weak, the stochastic weak, on balance weak, doesn't mean anything, but it will definitely on a close below the low of the 23rd, which is at 47.77. I'm going to say below 47.50. Start being careful because it will fill that gap. All right. With that said, now the Dow's down 488. S&P is down 82. Is that 82? 82.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Folks, we're back and we're looking at what, do you remember that 200 period moving average? I said, that's very high. Will it get there? That's at 55.15. And here's the S&P at 55.08 right now. Here's your cup formation. Here's your left side, right side price time match, which says that by, I don't know if it'll work, but by 10:35 right now, we're at 10:31. There should be a test of this high right here. That's the high of 9:30 this morning. And that was at, what was it at? 55.17.50. We're close. I'll see whether or not we can do that. Anyway, it's a very nice move to the upside. I don't know if it's going to be a 2-click session from that low, but we'll see what happens. Meantime, let's just get off this, and we've got a lot to look at. So within the context of where we are, this is going to be extremely important, because what I said is how we closed in the candle of April the 30th, going into the Friday close of May the 2nd, is going to be very important for a number of reasons. The first reason is we've got the conclusion of a candle that back on the 7th of April was looking really ugly. 17% down in a very short period of time. And we want to see what the close is. So let's just say we close right. Let me just see if we actually tag that number. No, we still haven't got that number. It's getting really close. We're at 55.8. We did hit 55.10. Yeah, we might just pull back a tad right here. But as I'm looking at this, I'm saying to myself, there has been a predictability about the market's dismissal of tariffs, and at the same time, there's been a predictability about the intraday consequences of statements about the tariffs. But if you actually look at the chart and you look at this, look, we could still turn down. We're still down 463 points. I mean, that's pretty serious. And I just need to get, I'm busy talking, so I'm just go flat here. Yeah, okay, I'm out. So as it stands at this particular point, I'd like to say the day is young. Certainly the day is young in the sense that we've had a really horrendous set of news, economic, geopolitical, political, just news events throughout the day, without the evening. Sometimes we've had the overnight smash to the downside of the market, and then the next day it's just very nicely up. Other times you've had those 1,000-point down moves in the down. So all I'm saying is I want to look at the chart. Look at this long wick candle. Let's just say we stopped right here. There isn't another penny to the upside, another penny to the downside. This is where we close. I would then say this is not quite a Chapman wave Roman candle. So this is the S&P. Let's go to the Dow. I'll explain in a moment. The Dow is trading right now. If I can find it on thing, here we go. INDU. The Dow candle. That's more like a Chapman. It should be a little smaller wick, but it's still very much like a Roman candle. And if the Dow closes is at 40,087, let's just say it closes right here. I would say immediately, if this is a Chapman wave red Roman candle that has all the characteristics, anytime it should be on a shorter time base. I should go to the weekly, but I'm actually going to go to the daily chart. If on any daily basis there is a close below 30,700, there's a real good chance we're going to revisit the 36,661 low that was made April the 7th. Within that context, there has to be 2 out of 3 consecutive bars that close above whatever the high is, and there's no way that we're going to go to the high of the month, which was at 382.27. If we go to 42,382.28, 1 penny above, that says that counts as 1 bar above the actual wick high, not the body, but the wick high. Then you have another month it could close down, but in the second month you could close above it. That's the action that says you've now turned the body of the candle, the low of the body, and that's this low right here. That means that was the open of 41,879. Let's call it 41,880. You've turned that into key support. So there's a whole spectrum of things that could happen. Okay, within that context, the QQQ. This is an amazing candle. You can barely see the wick. Look, you opened on the QQQs in April at 467.30. You're trading right now 467.08. In the interim, you tanked. You went down to 402.39. And it's only a leg 8 to the downside. So, I mean, this candle looks beautiful, doesn't it? The day is young. The month is young. We'll see what happens come up next week. Because why? Look how easy it is to go from 467 right now to the high, which is 479. It's a little squashed. I can't see it. 479.56, I think it is. You go just above that, and you've got your first month from this candle to the upside. So that's why I'm saying this is so important, right? Here's another thing. The IWM. This is not a nice candle. Look at that. And this one, I'll use the same technique here with the wick. I'll say at any point on a daily basis, if it closes under 184, watch out, because you could retest the low of 171.74. All right, I just wanted to go through the parameters to say, if I had to add up all the news that was bad, that was headlines in the newspapers. Remember, I said on the 5th? I said that this chart right here, on the Friday, I believe that was a Monday. What was the 7th? I didn't believe it was a Monday. April the 7th was absolutely a Monday. I said on the Friday, I said that the Boston Globe and I believe the New York Times and a number of other newspapers that I glanced at as headlines had charts on the front page. Charts on the front page. They never do that until there's a real crash. And I said, that has to be some kind of a low. That just, in my work, the way I look at the markets over the decades and decades that I've been, when you get that kind of hysteria, you're invariably making a low, maybe not the low, but a low. And that was it. There's on the 7th, the relative, the internal low and residual low. But we haven't broken that double top that I said right there, that made me a little nervous. I could extend that right through here and say we're in the same category. We haven't broken out yet. No, we're in that same category. The only way we'll break out is sometime in May if we're actually trading in Dow 41,150 to 41,200. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
A question came in, a number of questions. Well, one is, how did I calculate the 17%? Well, if you go from 6147.43, the high of the all-time high of the S&P 3 months ago, to the 5,062.25 low, that's 17.6%. So that's how I calculate it. But even if you had a look at it just on a chart basis, I'm just surprised with the incredible bad news every day in the paper. Look how it held that beautiful trend line support. And the chart itself is, as you can see, it's just it's only 3 months. We could go on for 4, 5, 6 months. That's something completely different. But at this particular point, all I can say is if I had to calibrate the amount of bad news that's just pervasive, it's just everywhere. Whatever you listen to, whether it's conservative or progressive, whatever you listen to, news, it sounds like we've just crashed. But in fact, this is part of the normal procedure. It might not be in 2 months' time if we're down 20%, 25%, 32%. But right now, that's all I'm saying is right now, that's where it is. So I just wanted to go back to this chart. Look, it failed just underneath the 200-period moving average. I think it's attempting now to at least try to get there. I'm not sure it's going to do that. But more importantly, as I look at it, this is nice action because that's a magnet now. 55.13 should be a magnet. And I don't know if it's going to be a magnet, but I'm thinking of it that way. And if that's the case, then we're going to treat this as a kind of a benchmark intraday in the morning. 10:20, we're already past 10:20. We're at 10:44 in the morning. And it means that now another group of buyers and sellers will come in, and I think the buyers, just for the moment, are going to proliferate. And I wouldn't be surprised if at any point we actually start to trade in the E-mini. It'll consolidate around here for a little bit, but if we snap through, the next level will be 55.13, the 200, 55, that is the number, 55.13. The ones above are just way above. I'm just going to mention it because they're there, 55.51. I'm not saying we're going there at this particular point, but it wouldn't surprise me if there is more upside action to come, as there is a kind of a feeling that a lot of the selling has been done. And now we've got almost, I wouldn't say a normal market, but we've got a more normalized market at this particular point. All right, let's get out of that. And I want to go back to the stocks. So I didn't finish. I was looking at the GDX, and I said the GDX is holding quite well. It is down 5 cents at 48.42. Silver right now, look, now this is going to be very important. Silver has more of this H pattern right here. It's testing the low of 7 days ago, 7 days ago. That's the low in the silver at 32.36. As I see it right now, based on the daily, weekly, monthly charts, and look, this monthly chart, this is a Chapman Roman candle in a monthly chart. It says at any point if silver on a daily basis closes, should make it a weekly. I'm going to make it a daily basis. Closes under 30, it's at 32.76. If it closes under 30.90, it's a, just be careful. Now, I'm not sure it's going to go test the 57 200 period moving average in the weekly chart, but I would say, that's going to be very weak action. All right. Now, within that context, what I am looking at is if you look at, let's go to the SLV, which is just a slightly different chart formation. You can see, look, what we've got here is we've only got a peak B. We made a peak C in the overnight session, which is the futures, and that just says to me it's a little bit weaker. You've gone from pink to green, and now you're pulling back under the 14-period moving average, and that makes me a little cautious. It's in a trading band, so I wouldn't say, oh, you got to get out of your silver because it's going to tank. No, I think it's just the digestive phase from the move that started in the 16s back in 2022, going all the way to the 31s, and the double top from the October high of last year to the high of March of this year, that's taken its toll just in terms of saying distribution, timeout, and as far as I'm concerned, this candle right here, Chapman, this is a perfect Roman candle as it stands right now. And in this case, I'm looking at the iShares Silver Trust. Any close on a daily basis below 28.50 says, be careful because you could run down to the lows. But this is one of those cases where the 9 is so far over the 14 that it would take a slide under 24.20, maybe 24, to really turn that green monthly chart, the green 9-period moving average negative. So I think it's fine. I think it's holding. But if you go to some of the PAAS, that's Pan American Silver, big digestive phase, had that sudden spike to the upside, which I had no choice but to call. Did I call it correctly? A. That's the A right there. Yeah. So I don't know what that spike is, but that spike up on the Pan American Silver spiked up on the 16th of April to 28.60, and here it is at 25.02, and the 9-period moving average today has just turned pink. So just be a little careful. That's what I'm saying. Next question came in, and let me go running this down there. Could I look at? I did that. The low of the bar. Mr. Bill, maybe I'm doing something wrong, but I've got, maybe, let me just double check that because he's asked me twice, therefore I may be doing something wrong. Yeah, the low of the bar is 506. Let me just double check. Is 4910. Oh, you are absolutely, thank you so much for pointing it out. I don't know why I did that. You're absolutely right. I did not take the low. The low is 4835. Oh, I got to recalculate everything. 4835. 4835. I don't know what it was. It was point something 12 or something like that. Ho. So I'm going to recalculate. That's my mistake. I have to do that again. So the high was, the high water mark was 6147. 6147. And the low is 4835. 4835. It's going to be very different. 4835. 21%. Ho. 21%. I'm going to make a change right now. Thank you so much for pointing that out. And I looked at it and I said, that's not bad. 4% more. That's serious. So that's getting closer to the 27% level, right? So, but still, 21% is not 27%. However, okay, I've got that right. Thank you. No, it had to be the low. I go from the very high to the very low, and you're absolutely correct. Thank you, Mr. Wolf, for pointing that out. Good. So I'm going to start that over. So when you, not the whole thing, I'm just going to say, look, here's the move that was down 27% during the previous administration to the October 2022 low. And this one here is from 61.47 to 48, whatever I said. 48 right there to 48.35. And I said 0.12, but I just guessed it at 12. Let's just see what it is. I'll be back.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
I was checking over here to see some of that. Okay, so next question came in. Let me just get to this right away. Yeah, so that 200-period moving average has been pierced at 55.11, 55.12. We went to 55.15. So this is important. We go one step at a time. If at any point today, now the buying seems to be coming in, but it makes 54.90 key support on the very short term of the E-mini. But at any point, I don't care when it is, if there is a push and you can see the E-mini climbing, that'll be a leg B right now in the 10-minute chart. But if it climbs over 55.33, all of a sudden you can say, that 55.49 200-period moving average in the 5-minute chart will become a magnet. That's number one. Number two is, so I had to do something today that was really important to me. I thought positions that we took a couple of days ago would have had a slightly greater increase, and therefore if earnings came out and they were disappointing, we could still withstand that. But it was too tight. So I said, take something off this morning. So one of the positions had a little bit of a profit, then a little bit of a loss. The other one had a little bit more of a loss. But we're out of it, and I'm upset only in the sense that if there's a big spike to the upside after earnings, I'll feel stupid. But I don't feel stupid in the sense that I had to maintain some discipline on a day like this when we had profits, but it was really small. I didn't want to sacrifice that by having the price close towards the low of the day, and then if there were earnings and it was gaps down, it's even worse. I just had to do it. We can always get back in. I just didn't want to get out. We are actually in the core position. But another position that we've been waiting to get in, we managed to get in, and this is going to be important because this is one of those deep cyclical stocks that if it starts to move even higher, is going to give us a great deal of information. And tomorrow I'll start talking about the steel stocks and see how they've handled April and what portends for May. So with that, check my opening call out, daily newsletter. Stay tuned for Steve Rhodes. Should be a great program. And